So welcome to the 2015 World Stock Market Strategy Update and Forecast for tonight. And this was a rush job, and we've got to look at the big picture at the moment. So we'll start looking at the big picture. Here's our disclaimer and warning prepared by Ideal Financial Group, Corporate Authorised Representative 299753 of Aruda Proprietary Limited, AFSL 338674, and Adesk Trading Proprietary Limited. I suggest you talk with JR at i-deal.com.au and get yourself along to get a brokerage set up with him, particularly if you're running your own self-managed super fund and you may have another account, but if you want to do some trading on your personal account, and JR's platform is excellent. So it's always pays to have a second account so you can do stuff that you want to do either for fun or for making a bit of income, even if you've got other brokerage accounts set up. So let's go on. Now this information is not prepared for your specific investment objectives, financial situations, or particular needs, and it should not be seen as its general advice, and it should not constitute financial product advice and does not take into account your blah, blah, blah. Prior to seeking advice from Ideal or anyone, you should obtain and consider your financial services guide and consider the product disclosure statement issued by and available from your ideal.com.au or any other broker that you're using. Ideal's made every effort to ensure the accuracy of information, but we cannot warrant or represent as to the accuracy of reliability or completeness of the information. To the extent permitted by law, Ideal accepts no responsibility for any errors or misstatements, negligent or otherwise. The information provided may be based on assumptions or market conditions may change without notice. And it's about leveraged products. Trading derivatives can be risky. Losses can exceed your initial deposit. Derivatives trading may not be suitable for everyone, and you should fully understand the risks involved in seeking independent advice. Ideal, its associates, officers, and employees may also have interest in financial products referred to in this information, acting in various roles. They may buy or sell the financial products as principal or agent and may affect transactions which are not consistent with any recommendations, if any, in this information. Ideal, its associates may also receive fees or brokerage fees for acting in the above capacities. Consult a licensed investment advisor before making trading decisions. Isn't that good? I wish it's a whole mouthful, and I don't understand how they think that you should be reading this shit out all the time. We just be putting it out there and putting it out in a message. That might be a better idea. I should maybe talk to JR about that. Hey, Kevin, welcome to South Australia in a couple of weeks' time. Thank you for booking in. Should be fun. One Profit Hunter Group member, Gary, is actually coming along for his second one. He came to Queensland. He's coming along again to the train the Chartist in Adelaide. And so that's pretty cool, I think. It's good to see. Now, let's get some things happening. And what do you think of the markets at the moment? Anyone got any impression? A lot more fun when you don't have to be involved when it's falling, so we've sort of been hanging around. More nicer if you're being short. Setting up for a good entry. Yeah, that's right. Okay. Well, right now it's negative, and the clock's been negative for a couple of weeks, and it's been falling since basically when the clock said expect a decline. So this was a good point, and you may have noticed that we had more PHG trades to the short side, and really since then we've had a move that has been reasonable size. Let's just check to see what the size moves have been happening in the S&P 500 cash index. Now, we've had bullhorns warnings last week on some Australian stocks. We've had some bear pause warnings on some, or at least this week, on some Australian stocks. And generally it takes a couple of weeks for those to go out. And you'll remember that I said that I thought the Australian banks, particularly the CBA, would be starting to be okay in a little while soon. So we'll just get into this and we'll look at the E-mini S&P. And we're going to do a bit of a thing here, and it's probably going to cause us a little bit of pain here. I want to just check the swings down and see some time and price that we're seeing on here. See what's going on in terms of the swings and percentage and length of bars. Okay, so what we see here is it's taken 13 days to go down 2.3%, 2.7%, 23 ticks. Now, we do know that the E-mini S&P is now trading down at 270. So we can see here it's maybe 269. I think I saw the low. So it's 26 points down from its highs. I think it's actually come off further than that. And so I don't quite understand the maths involved in this little calculation here. But as far as I'm concerned, 2134 less 40 is 2072. So let's not worry too much about what they're saying here in terms of the numbers. The maths doesn't seem to be right. Let's see another swing down. 250 ticks down. So it's a little bit more than the prior one. And then we see another move down here, and we see 300 ticks, 30 ticks. So this is suspicious in terms of numbers again. Actually, no, this is ticks because it's in quarters. We've got to understand that. The ticks are in quarters. So this is 250 ticks, which means that's basically about 40 points down. This is about 40 points down. This one over here, probably not understanding what I'm doing here, but just you'll get the picture soon. $350. So we're seeing the big ranges down, but not big enough to say it's absolutely turned yet. I would say that would be below here, the 350 area, below 350. So it would really need to be, say, getting below about 2035 or 2050. Where are we? Yep, below 2050, that starts to turn it lower and get real bearish. At the moment, what it's doing is it's giving us, welcome Julie, Tony, how are you? Sorry for the short notice. What it's doing is it's giving us some signs that it's starting to trend to the downside, but nothing absolutely definitive. Now notice here we're looking at the monthly chart. These are the monthlies. On the weeklies we see a basing from a low base ADX, and a separation. Notice that this kissed, it's an unusual position. It's kissed twice. It's been negative on the way up. This is the DI minus, and the DI plus has been negative since basically December last year, but it's been making new highs. Now that's something I haven't noticed in terms of divergence. And so we're in a little bit of a weird world. I was just watching some auctions, and we had some inspections in the property, and one of the real estate agents said, "Oh yeah, we've been selling heaps. We've been selling heaps." And oh, you know, somebody paid $5 million for this place. I thought it'd go for 3.9 or something. It went for 5. Now look here, we can see on the weekly chart we've got a breakdown on the struggle street pattern. And yet things are being passed in, properties being passed in. Yet he said a real estate agent actually bought this property in O'Donnell Street in Bondi for $5.1 million, right next to the stink pot in a place where nobody used to want to live, but it has views of the water. Chinese are not buying. And we can see that we're seeing a breakdown now, an increasing volume on the weekly chart to the downside from a low base ADX. Full stop, this is trending down on one level. Now, my clock starts to turn up a little bit in the short term. Notice here we're starting to trend down on the dailies. So we're getting a breakdown on the wedge. The struggle street pattern has spoken and it's starting to roll down. Now, how does this work? Where can it go to? Well, the first area that you would think it would go to, if it can get worse, and I'd like to think you get a rally before it gets worse and a retest of the breakdown point, but you'd really be looking to 2011 on the downside and possibly 1929 on the monthly chart if this is a decent retracement. Now, you can see this a bit more clearly on the weeklies, 2011, 1935. These are normal retracement targets on this time frame. To, I think 20 over here, the low was 1973. Okay, so 1973 to 2011 or 1935. In that zone is where you would normally expect a reasonable retracement. Sorry, this is doing some calculation in the background, which are a little bit disturbing. Let's look at some cloud analysis and see where the support will come in on the cloud. And we'll pick it up over here and we'll look. Notice that it's breaking down on the daily below the cloud. And let's look on the monthlies. The monthlies have a fair way to go to the kitchen line, kitchen cent at 1842. That's a long way down if it wants to roll. And the next best area is the 2045, 2050 areas. Remember I said in the retracement, if it gets below there, then it's overbalancing. So the next target would be somewhere around 1972. So at this point, do we want to be exceedingly bullish? No. What we want to do is if you can get it above 2095, you might look for a rally towards 2010 and then another decline. So at the moment, things are rolling over on the dailies. The weeklies are showing signs of a bit of a breakdown. Do we have a place where we can buy it at? And the answer is probably not just yet. Let's see if we can see what's going on in the rolling over. And my computer's just telling me I shouldn't have two computers open at the same time. Right here, right now, you can see that it's actually sitting right on a retrace. And I think I gave the 2070 as the target area. You'll all remember that. And so it's on a retrace now. Now, in terms of my negative positive clock, my negative positive clock is telling me that it starts to turn up in the next couple of days for positive to the positive side. So we should watch for extreme pessimism. Do we have an extreme pessimism from brokers, etc., or are they just going, this is a buying opportunity? What are you seeing out there from brokers? Because I must admit, I haven't been able to watch any of the idiot box to see what the talking heads are saying. Are they negative? Are they agreeing with me? Or are they going, still buying opportunity? No one's been watching the TV. I've infected you, haven't I? Really? Let's see if we can find any support areas. Notice it's trending to the downside, and if it takes out this area here, below 2067. So at the moment, if you are short, take some profit. So we're going to take 1/2 profit now at 2074 on the PHG trade short. We're going to leave some in the kitty at 2033. Please write this down. I better do that too. We'll look to resell at 2095. We're going to lower our stop to 2085. Okay, no one's given me anything on the sentiment. Has anybody been watching it, or no? No, not at all. Okay. So that's the E-mini, and that's the S&P 500 cash. And the S&P 500 cash, we're coming close to the 2075, 2076 area. So what you would do is, if you were buying some of this back and you wanted to re-enter on the downside, have your stop loss at 2064 to re-enter looking for 2039. Have your stop if you are going short above 2092. Full stop, new line. The Dow transports, we can see falling on high volume. That's not good, but looking towards 2080.96. Now it has done ratio on the downside, so if it takes out 8,500, then you buy it looking for 88.52. I can't see a reason to do that just yet, but people do weirder things. It's nice ratios, but the better ratio sits at 82.24. So I think that would be a good spot if it gets down there, and you could be forgiven for thinking you buy back any shorts down there. Let's look at the Dow, and we're looking at the monthly chart. We can see the struggle street pattern has broken down just slightly, but we still don't have a monthly breakdown. See the low here? 17,733, 17,760. Should that break, which it might do, the next target is 17,285 on the bigger time frame. You can see that it's gone short for the first time for about 4 months. On the weekly charts, the target would be 17,642 or 17,392. Okay, NASDAQ. So let's just keep it to the bigger stuff. NASDAQ, this is the NASDAQ on the monthly we want to have a look at. Again, struggle street pattern breaking down on the monthly charts, but not yet broken. Yes, it looks close, but no breakdown on the actual monthlies. So here convincing would be below 43.10. There's definitely some ugly patterns here. So you don't want to be long in a hurry, but you want to buy back some shorts tonight or whatever, because the clock turns a little bit positive. This is tough. These patterns are quite definitely reversal patterns, and quite definitely the bonds have been copping a hiding, and they're going to make it much harder, much harder for the market to go up, because higher interest rates will absolutely kill the US economy, particularly in the longer term. Now you can see the failure in the 30-year bonds here. This is quite a strong failure pattern, with 145.25 as the right area for it to get it down to. The weeklies And I'm looking at the bonds because the weeklies, the bonds are really copping a big move. Let's look at the 10-year notes, which hasn't had that contract changeover. And the 10-year bonds have failed to rally above this point here. If you do some Elliott wave counts, you'll see it failed to get above, this correction failed to get above this lowest close. And so 121, 120 on the downside. Notice the volume from last month was very high on the downside. On the weeklies, we see strong volume on the downside on the weeklies and 5-wave structure. This is an ABC pattern, 1, 2, 3, 4, 5. But before this was as ABC, and this is somewhat corrective in nature. So what we're getting is long-term interest rates going up as we forecast for the year, and subsequently the equities markets are copping a bit of a hiding. Let's drop down into the equities of the volatility nature, and we can see a big long basing formation in the daily chart. We see a big long basing formation in the monthly chart. Now, when we step back to the similar time period, okay, so we're in 2015. If we use 2005 as an example, the volatility, even though the stock market went to new highs in 2007, the volatility started to increase. So I think we've brought forward the purchasing decision for shares by a large amount. This 2005, 2006. Come 2007, it started up in terms of volatility. So if we're a year early, see 1996, volatility started up. 1997, even though volatility seems to go down when stock market prices go up at the moment, that's going to change. 1995, bit of a confused basing pattern, and then it took off. I'm not sure if we got a 1985 on the volatility index, but I think we're about a year ahead of where we should have been. And so I think the low volatility time was either here in 2013 or 2014. And I don't think the volatility will get cheaper. We've seen it try a couple of times to think about being down towards 10 or 11. It just hasn't got it. Let's go on the weekly charts. You can see it breaking up. See, that's a wedge. That's a struggle street pattern. So at the moment, we have some signs. Volatility is increasing. And you'll remember I said start to buy some explosion positions. And, you know, like I'd like to really see it move up from now. That's very quite wedgy. And it's a bit different from these 5-wave structures on the downside or this bizarre sort of pattern on the downside that we've been seeing previously. So volatility is good at the moment. We'll run to the German DAX. I want to check for some lost souls, see if they ever get in. And thank you all for coming in so quickly at short notice. I know I didn't have a So the question I posed is, what should we do with a non-existent, what should we do with our bond position? Now we see the German DAX, 10,849. That's getting down into the zone where I said it should. And maybe if you're short the DAX, you might want to take a bit of profit. It is trending to the downside on the daily, so you might want to have your stop loss above 11,300 if you're in there. And let's look at the monthly charts. Notice here, I think the market's love affair with quantitative easing is got mold on it. It's getting a bit moldy because the German economy and the German economy benefits from quantitative easing because everybody just rushes out and uses cheap money to buy Mercedes and Audis and BMWs. But I think if you're going to stage a buying frenzy or a reason to buy on the German DAX, it's down at 10,849. This will be a new PHG trade. Buy German DAX, new PHG trade, 10,849. Stop loss below 10,650 if you can handle that stop, or 10,790. I'm just checking the supporting documentation. This is the monthly on the patterns here. It could go all the way down to 9,997. Hopefully that doesn't get down there. Here's your 10,800 area. So below there, 10,780. Sorry, 10,780. Below that starts to look smelly, but down here is worthwhile buying on a candlestick basis and a retracement area basis. Now here, if you're looking to buy or back on the short term, 11,335 if you are short the German DAX. Let's see where it is tonight. It doesn't look like it's going to come up in a hurry. Let's play FTSE. I don't think I can get the FTSE tonight. Open data. We'll see if we can do that. FTSE is showing us nothing, taking us nowhere so far. Here we go. The 15th on the daily. No. Monday, 15th of June. I don't know how that works. Here you go, 9th of June. This is tonight, and it's slid down a little bit. Let's see where it is on the bigger support area. That's around the 6,566. Let's look on the weeklies. We can see that's around 6,636. Let's look on the dailies. You can see it's been trading below the cloud. So there's a tendency. DAX is down 144. So there's a tendency for this to be weak. When you say the German DAX is down that far, let's see where it is on my system. And currently have we got, here we go, this is tonight. So we're getting down into that zone. You've got that panic. I think if you were short, you need to buy this back after so many days of down, but not all of it. Buy part position back. Let's have a look at the Shanghai A shares index. And I'm deliberately looking at it in a way that we don't normally do, because I want to make sure that I'm not missing something. Now, what can you say about this other than it's getting lots of money in? Now, somebody was telling me that what's happening is that the Chinese are making so much money in their stock market, they're actually going out and buying everything else in the rest of the world, because the rest of the world have come in and bought the Chinese stock market. They're spending all the money. And the Chinese that bought in early down here are starting to sell out to the foreigners. How much of that is the truth? We'll never know, but the wash up will be interesting. So the insiders got long, and they were actually told by the Chinese government to get long. So at the moment, it's still moving along pretty nicely, and we see a little bit, still no reason to doubt that this is going higher at the moment, unless it breaks 5,000 at the moment. Still pretty good. Let's look at the Shanghai A shares index. The one we looked at just then was the Shanghai Composite Index. Let's check the monthly charts. And you can see very quickly it's got close towards this target. It's got, what, 1,000 points, which it been doing. Did 800 points in this month, which is April. It did from low to high. It did 1,000 points, just under 900 points in 1 month. So it can be only 1 month away. It did 500 or 600 in this month so far. So it can only be 1.5 months away from getting the old target there. What's interesting is there was a good dose of volume there, but it's been dropping off as it's been rallying. So curious. Still don't want to short the Shanghai A shares index. What about our friends, the Nikkei? Let's drop into the monthly chart. You can see it's broken down. And on the weekly chart, we see a breakdown, a solid one, looking for 19,103, 19,661. So weeklies is broken down and that's pretty good. Best target 19,100. Strong move down so far, and it's just surpassed the normal target you'd have on the dailies. So you're looking for this to be doubly retraced to 19,100 on the Nikkei. Let's look at India. We'll have a quick look at some of these markets. Welcome to everybody who's just come in. Teresa, how you doing? Sorry about the short notice. Jonathan. This is the FTSE of the, what's it called? The Nifty 50. 58.90. Everyone's been talking about how good India is, but it's really buy-worthy, down 58.90 to 56.89. That's a better area, looking for new moves up towards 9,222 once everyone gets bearish. On the weekly charts, we can see it's teetering on the edge of really going for a bit of a run. And I'm not sure whether I'm looking at the right index. I'm sure there's better indexes for India than I'm looking at. Let's see if we can find something here. Or that'll be irritating if I go looking for that. G'day, Erica. How you doing? So what we're seeing is equities are weak, but I do think it's worthwhile a profit take now because things are getting knocked down and they're getting into the areas of support. Let's visit the Italian MIB, and I think it should be kicked hard today. The 21,655. Notice it's come off that double bottom, and I would have thought that it would have been kicked a little bit harder, and it's a bit confused. So if you were short, then maybe worthwhile taking some profit, and if it does break down below 22,318, then look for 21,655. And so where's the E-mini doing at the moment? I don't think the percentage is being short now, and we can see it being bought back. We've bought back 1/2 of our PHG trade short, initiated around the 2110 area, so that's 40 big points, or actually 36 points profit with the 2074 profit take, and lowered the stop to 2085. Is everyone happy with that? So that's international equities, and I think things like the NIB, we've been looking to trade. You need to buy the break up. We've talked about that this morning in the PHG trades. We're also looking to buy TBT. We're also long TBT, looking for 53.56 if it can blow its head off above $51. Stop would be $48.82. So at the moment, let's look in the monthly chart, see if we've got some downtrends being broken. Didn't quite retest there. Boom. And I found it interesting in the auctions tonight, there were no Chinese participations. A number of properties had already been bought. A number of properties were passed in the eastern suburbs. And the bidding was not particularly strong. And I saw a one better unit where it was nobody, it was just a young girl, I think probably desperate to buy something. She paid $440,000 for something in Bondi, and it did not. The agents are going, wow, that went cheap. And so I think you find that, and I think you can rent that for about $450 a week, because it was right near Bondi Road. No parking, of course, but I think there's a little bit of softening in certain areas and insanity in others, with one real estate agent himself paying $5 million for a property in Bondi, which was super record property for a street that has views, but is one of the smelliest streets in Bondi because it's right next to the sewage works. And anyway, the TBT, we're seeing the rally. It's going to be hard to get above $58.52. Now, do we have any equities markets questions that you would like answered, or shall we move on to the Australian market? In terms of bull and bear pause warnings, let's see what we've got in terms of the the OEX. Oh, okay. IWM. Okay, I'll get to that one. That's a Russell, Erica. We have bull horns warnings in 710 US optionable stocks. That is quite a big increase, about 50% from last time. Full stop your line. Stocks like American Airlines, Barrick Gold, All Country World Index. All Country Asia. Just unusual. These things have been knocked off a little bit. Silver shares, JP. There's a whole lot of. It's mainly, must say, it's mainly shrapnel. There's not a lot of a big theme. Mainly a lot of gold stocks going into bullhorns warnings. Now, in terms of bear pause warnings, let's check the ratio. Okay, Erica's given me a lot of things to work off, so I'll just be with you in a sec, Erica. Bear pause. We have bear pause warnings in 398 optionable US stocks. Full stop your line. Some of these include Baidu, the Chinese search engine, new line. Bank of Hawaii, new line. Citigroup, new line. Sotheby's, new line. Direction Developed Markets, new line. ProShares Ultra Short Oil and Gas, new line. Japan Wisdom Tree Funds, new line. Casual Male Retail, new line. It was funny. A couple of nice gentlemen were getting married today, and they've rung up outside about or one of Azad's friends who does and consults with Azad about such things, and they needed things for hyperhidrosis. I said, that's very nice. They don't want to hurt their woman's feelings when they're getting married. No, it's for both of them. Adam and Steve, the classic. I guess they're not casual males anymore. They're serious. Will stop me line. Some pharmaceuticals companies, some petrochemical companies, Daily Energy Bear 3 times. They're coming up. Quite a few bank corps, new line. FedEx Corporation. Curious thing about FedEx is it's had a retest and it's now at risk. The ADX is very high and volume has been falling as the price has been rising. So a break below 172 would signal a fallback down to 138. Full stop your line. So you might want to look at shorts in FedEx. IWM, new line. This is the Russell ETF. Can't see it as a short just yet, but I can see it as being an aggressive short below 119. Full stop your line. Now, in every good bull market, it should be the tail that comes up the rear. And while this is diverging, it may still make a new high. Full stop your line. So a breakdown below 120 would start to confirm that, Erica. Full stop your line. Now, what we're seeing is a lack of mobility on the top side so far, but if it broke through 125.48 or 125.83, you'd start to think it's pressing on to new highs for its final hurrah, and you'd buy it with a stop loss below 123. Full stop your line. Now the target would be 133.17, and you'll notice that it lacks trend on the upside on the weekly chart. AMLP. Alerian. Now, Erica, I'm pretty sure I saw this in one of the bullhorns and bear pause warnings, so just bear with me while I find it. I think it was a bullhorns warning. That makes sense to you? ALMP. Yep, it's in a bullhorns warning. Okay. This isn't a bullhorns warning, and we can see on the weekly chart there's a bit of divergence to the downside. So if you want to sit there and absorb it up when they chuck it out, look down towards $15.82 to $15.49 as a buying opportunity with a stop loss below $15.20. Full stop your line. It's curious that the dividend paying stocks are not doing that well these days. Full stop, new line. You can quite clearly see that target area as being important. Full stop, new line. And if you're playing for the dividend, you might even want to have a stop close only below $15. Full stop, new line. If you're waiting for a break back, then buy a break above $17 with a stop loss below $16.47 and hoping for $17.91. Full stop, new line. The target towards $16.55. If you're buying for the short-term rally, and you could really have a nibble at it now, Erica, with a stop at $16.10 and see how it goes. It does seem to be trending to the downside, but if it can resurrect, its target is $16.55. Full stop, new line. Welcome to the ASX stock market forecast for today, 9th of June 2015. And certainly thank you for the questions that you've given me. Welcome to the close only below $15. Full stop, new line. So welcome to the indices for 2015, the ASX stock market. And whenever I get to see Charlotte Rampling or Helen Mirren, I guess because I was a lot younger when I attached some fantasies to these women, I guess I can still enjoy them into their 70s. It's funny. Anyway, heading south is what I said a while back in a couple of webinars ago, and it does seem to be working from there. So just remember, this is a disclaimer and warning prepared by Ideal Financial Group, corporate authorized representative, 299753 of Aruda Proprietary Limited, AFSL 338674, and Adesh Trading Proprietary Limited. This is general advice and does not constitute financial product advice. and does not take into account your investment objectives, financial situations, or particular needs. Prior to seeking advice from Ideal Financial Group, you should obtain and consider our financial services guide and consider the product disclosure statement issued by and available from i-deal.com.au prior to investing. Minimum commission, interest, platform fees, dividends, variation margin, and other fees and charges may apply. And hello, Mrs. Kevin. Ideal has made every effort to ensure the accuracy of the information as at the start of the publication, as at the date of publication. Ideal gives no warranty or representation as to the accuracy, reliability of the way that I read this out every time, or completeness of the information. To the extent permitted by law, Ideal accepts no responsibility for any errors or misstatements, negligence or otherwise. The information provided may be based on assumptions or market conditions and may change without notice. To the extent permitted by law, and Ideal's employees, officers and contractors shall not be liable for any loss or damage arising in any way, including by way of negligence from or in connection with any information provided or admitted or omitted, or from anyone acting or refraining to act in reliance on this information, or my mouth to be able to get around this. Trading derivatives can be risky. Losses can exceed your initial deposit. Derivative trading may not be suitable for everyone. You should fully understand the risks involved and seek independent advice. Derivatives can include options, can include futures, can include CFDs, to name a few different derivatives. Now, consult a licensed investment advisor before making investment decisions. Past performance is no guarantee of future performance. There is a risk of loss in trading as well as potential profit. You understand that you have to do your own research once you have learned these methods and do on your markets. No guarantees. Okay, so what are we seeing here? Well, my forecast said March, April, we look for a low. Well, we're beyond May, and we've looked for a low later on. So it's Ron, not as opposed to Ronnie, I'm sorry. So we're over here in this sort of time period down here. So this forecast, thank God, is not working. I'm happy about that in a lot of ways. We can see that I normally would expect a dip to come down into late June for the Australian market, which is around this time. And we're getting that, but we're getting it from a lower base, which means from down here. This week, I said that we'd think that the CBA would be interesting for the first trying at a buy. And then the third week of June, we would look into it. So dip into mid-June, rally into mid-April, dip into mid-June. So tick, tick. Maybe we get a dip into mid-June, and we're in mid-June. So we've got to be on the lookout. We've got to see how bearish the brokers are. Are they saying sell your grandmothers? Is Charlie Jawbone, or Sawbum as we call him now because of his buy the banks call? How much swallowing of words has he done? I'd like to find out what he's saying in the media. I bet you he doesn't fall on his sword and swallow his words. He's probably too busy shining his teeth and his shoes. In any event, so mid-June, end of June, I think we got to get long in some ways. So we should be looking for rally for the most of the year into early November. This is a normal market and have a bit of a shakeout. So we're coming into the time where we should be getting ready for doing some stuff and then rally back into December. So here we look at something. Every way you slice and dice it, there's another alternative, a dip in this time of year. There's a dip in this time of year. And here's the financials, which has really cut the mustard, giving us the decline we had to have from late April to late August. Let's look at the financials and we'll see where that's at. And this is what seems to have been happening. In fact, late April was over here and it was the third lower top. So looking for 52.95 on the downside. It's good if it gets above 63.96. Let's look on the monthly, see what's happening. And you can see 57.70, 54.81 would be the areas where I'd like the banks to get down to, the financials. A heavy hit last week, followed by a lack of a rally today, which is really only one day. But notice that it can rally, but up to 63.50, it's still negative. We do have a 5-wave structure to the downside, so the next rally up would be corrective in nature, as I've mentioned before, looking for 6,800 if it rallied. Here is the better place in a couple of weeks' time to be looking for banks. So we've done the financials, the 5-wave structure to the downside, something like 6,000 would be good. Let's look on the cloud and see where we're going on the cloud. The cloud, we're just sitting on the monthlies at the moment, so that makes it harder than you'd think. Notice it's just sitting here. So I guess the good thing is you can do a low probability, high reward trade by buying here with a stop loss below 61.42. Which bank to buy? There's a monthly chart. Monthly chart. See down here, maybe 61.15. You might even have a stop below 61.80. Sorry, 60.80. So I think you should be picking your target, and I think the CBA is one that has the better target if you're going to give it a go. CBA sitting there right now, just chewing into the kitchen sink, or the kitchen sink, as we call it for a joke when people are trying to explain it to me. This is CBA. It's chewing into these old tops. You can see that. So is the CBA the bonus that we want to see? I've been talking about in CBA a target around that, I think, was it $78 or something? Here we go. $79. It's trying. Got to 78, 79, 79. The big target, 75.91. Let's look a bit further. So 75.91. Is that better? Teresa, Kevin? You should be able to see the chart. For some reason, it decided to stop. This should be available on the recording. Is anyone in the emergency room? Because I've got to make sure I'm actually... Sometimes the emergency room, I'm recording it, but it's not displaying it. Enter the room. Okay, let's see if we can go in there. Okay, thanks, Kevin. It's good to pick that up. Now, so Commonwealth Bank still got to drift down and maybe a little bit more to the downside. So I don't want to be too into it just yet, but over the next couple of days, have a look, see if it can get a bit more momentum to the downside. And certainly if it gets above $83.28, expect to rally up to $86.25. So that's CBA. Is there any other banks you want to suss out? I don't think the other ones are really worth getting a hold of just yet. NAB, I still think 29.76. Sorry, ANZ 29.76 is sort of right area, 29.76. There should be some stop losses below here, and there should be some unhappy brokers below there telling you to get out of the banks. Notice this, wave 4, we probably need another decline down to that area to fulfill my dreams and fantasies about at least one of those banks with a 2 in front of it, not a 3. Now, NAB, it's come back down. Now, this is the monthly charts looking up from the low in 2011. We all remember that. That was where they smashed the US credit rating, and then the US stock market promptly reversed and went up. Now we got a 38.2. The big one is $30.16. It's sitting back on the old tops. So if you were short NAB, it wouldn't be bad to take profit here. If you were greedy for buying, $30.16 is the better zone. Let's see it on the weeklies, and I will do Suncorp. We can see here that the volume has been dropping as it's been falling. So if you wanted to have a nibble in NAB, you could try some with a stop loss below $30.96. Don't expect it to give you a lot of life because volume is a bit ugly. You might have it a try at $31.46 on the dailies. And in this case, the stop loss would be $30.90 below there on a stop close only basis. Now let's look at WACPAC. $30.26, $29.48 as target. Volume heavy on the monthlies. Still no sign of reversing other than it's tried a double bottom. And it's sitting right on the old top. So if you want to have a nibble on Westpac, you could have a nibble with a tight stop below $31. What's better is a break above $32.55. The target would be $34.46. Now we've got a 5-wave structure. The downside, we've got a 4th wave there. We've got a little rally up here. Maybe there's one more go. Maybe there's not. But again, if it breaks above $32.51, that would be healthy with stop loss below $31.63. Now, Suncorp, SUN. This isn't as bad as most of the other banks look, and I'm not sure why, but $11.80 would be a nice place to pick it up as an investor with a stop loss below $11. And you could still hope for that $16.20 big retracement area for it. In the meantime, your $14.90 is good. Let's see if we can find something on the weekly charts. On the weekly charts, it's still hunting for $11.80, and maybe it's a buy if it breaks $13.44, hoping for $14.19. You can see some jiggery pokery going on here, and if you are buying a break up above $13.29, you can buy it with a stop below $13, hoping for $14.34 or $14 shorter term. So not as negative on Suncorp, but leave it for a break. Are you asking for Suncorp? I just talked about that. In the longer term, I think it's okay down to here and then another try to $16.20. Will we get to previous high levels? I don't think so, Kevin. That's not going to happen. Oh, I should never say never. But higher interest rates are going to hurt the banks. It's been one of my themes for a while. I know you've had a bit of a holiday. It's been my theme that the banks get hurt by higher interest rates, particularly in the long end of the curve, and that's certainly been what's been happening there. So Bendigo Bank, again, down towards $10.97 to $11.32. That's a nice zone for a pickup. Stop loss would be below $10.50. If it can't hold that, then worry about it and think about it back down towards $99.15, that sort of zone in the middle there. Bendigo, 11.32 still targeting, or on a break above 12.17. Stop loss would be below 11.82 if that was the case. Now the other one is BOQ, and I was at a meeting the other day where they were actually very negative, Bank of Queensland. They want a POQ from BOQ. What we see here is a 1, 2, 3, 4, 5 stroke. It's complete, but it's not rolling over. So I would say if you're long this and you're hoping for a bit higher, you would have a stop at $12.25. It may roll back down if that's triggered down to $11.41. You notice on the monthlies, it's actually not been that heavily hit on the volume just yet. On the weekly charts, we don't see the heavy volume. So you might want to be trying to pick it up there with a stop loss below 11, buying at $11.41. So the peripheral banks seem a bit, this is a similar pattern to Westpac and ANZ and not a NAB, not CBA. CBA is the next one to pay dividends, so it's the most on the suspect list for a purchase. Okay, that turns our minds off the, did I do Suncorp? Erica, I did do Suncorp for you, yeah. Let's do a BOQ on the monthlies and see where it's at. And here's that area there, that's where the kitchen sand is. So it's probably, you don't want to get too into the banks until the third week of this month of June. CBA is the first cab off the rank. Let's have a check on Bank of Queensland. And again, this is more towards July where you want to pick it up. What about Bendigo Bank? And we'll look at Suncorp as well. Bendigo, kind of third week, and then early July, and then start to get interested in it. And Suncorp. Suncorp, interestingly enough, is the end of July. And it's not having that good a time either. Okay, let's check out the materials index. Now, last time we looked at this, we were seeing materials index which was end of March, late August, and some of the dates in between are a little bit grey. So we're sort of in this middle part, late July, August, early August is there. So we're in this middle part here where we're probably that decline, we're in the middle of that at the moment. We do have some bigger targets for the materials index on the downside, which I gave today, and hopefully some of you can recite off those by heart. It's in a bit of, it's hit the level, but the 88.04 area is important, or a break above 92.87. So materials could be of interest now, particularly on a break back or down to 88.04. Let's do it on the monthly, see if we can get a bit more perspective. This is the monthly chart of the materials index. Where was that big boom coming from that everyone thought? Not so flash, really. And the target area up here would just be a retrace if it got to 10,756. So my forecast about BHP still holds. That SIC stop loss would be below 8,954. So you can give it a go now, particularly if it breaks up, or down at 8,804. But don't be surprised if you see it lower. What about the sleepy Australian, the smaller, the diminishing Australian? The diminishing Australian got, my target was $27.84. It's got below that. It closed right on its lows for this month so far this time, and it still sets up for $19.81. $20 or $21. Volume so far this week, we've had one day and it's done about a quarter of the volume from last week. That's not a good sign. That's not good. On the dailies, we're going to see what happens on the dailies. We see increasing volume. 25.61 is the target. We have a PHG trade short going on at the moment. Stop loss should be $28.79. It's amazing how much stuff you can do in a webinar, isn't there? BHP, PHG trade, 8.72 cents stop loss. Okay. I'd like you to start talking to people and ask them what they think of the stock market. They'll tell you, I just buy property. Property's good. Did you see that price that went up? It's in a bull market. When you don't see any Chinese sitting in an auction in the eastern suburbs, you think there's something wrong. And there were no phone bidders. None. It was only South Africans buying. Now, South Africans have a limit, and they're usually coming from St. Ives. So they've been given some money by the Chinese, and they don't have that much money anymore. So property is coming to an end because of higher interest rates in the long term and a lack of capacity to pay and a vacuum where the Chinese are only buying over $5 million or $3 million or $4 million or whatever it is. So things are changing, and let's look at Rio. And we've talked about the commodities. We see here nothing really on the monthly charts. So what can we glean from this? Materials are a problem. Let's look on the telecoms index. We can see here the biggest decline in the months were 1.5 months down over here in this period, in late from August to October last year. We saw 1, 2, 3 or so months down. This time it's only been 1 month, 2 months, 1 month, 2 months, 2.5 months, 2 months, 1 month, 1.5 months of flatlining. So since this low back in the disastrous days of 2010, 2011, we haven't seen a pullback of 1, 2, 3, 4, 5 months. Would anyone agree that's a little bit dodgy? So telecoms, we see some good declining. That we call this a declining. We call that a descending triangle. So that's not good. And 2040 on the downside. So Telstra and its friends are not so good. Telstra, not so good. You know, $5.14 would be the logical area for it to get down to. So let's go. We've looked at bullhorns, and I'll read these out because these aren't going to be what you see on the screen because of my lack of ability to run away from the house and hide from real estate agents and their customers, potential buyers. We have bullhorns warnings in the following Australian shares, new line. ANZ.ASX, BHP.ASX new line, BLD.ASX new line, CCL.ASX new line, FXJ.ASX new line, LLC.ASX new line, MGR.ASX new line, NAB.ASX new line, QAN.ASX new line, SGP.ASX new line, TLS.ASX new line, WES.ASX new line. Now, did any of those pique your curiosity? If you're happy to answer any questions on those ones, if you're into it. Qantas, Erica. Qantas, we have seen lower crude oil prices. Where would you want to buy Qantas? So Qantas, you really have to think about down towards $3. That would be the right area. And that would be in 1 or 2 months' time, full stop, new line. And you'd be buying it maybe as low as $2.70, but you definitely need a stop loss below $2.60, stop close only, full stop, new line. On the weekly charts, what you see here is it's teetering on the edge of going short with a stop loss at $3.17. So if you're long, stop should be at $3.17. If it can hold $2.71, expect $3.85. Full stop, new line. On the dailies, if you're super keen to buy this, you'd need to buy it through $3.46 with a stop loss below $3.22, hoping for a move towards $3.76. Eugene wants to play Warren Buffett and buy Coca-Cola. Now we see some heavy volume to the downside on this. This is probably showing up as a triangle, which would mean that it can get down to $7.78, $7.07, full stop, new line. Now, if you are long, what I suggest doing is having a stop loss at $9.11. If you do buy a breakout at $10.43, that would be the area that I think it should get clear, and you would hope for $12.66, full stop, new line. Until then, I'd be more interested in these lower levels, full stop, new line. On the intermediate time frame, if you're looking for a quick pickup down to $9.26, you can give it a go there and play Warren Buffett with a stop loss below $9. Eugene, and I hope towards probably around $12.18 or $12.66 at best. Now on Wesfarmers, thanks for your question there, Tony. Sam, what are you doing up so late? I thought you were an early person. On Wesfarmers, you can see that really that's a pretty reasonably strong bar for the last 9 days down. It's lost a bit of faith. You'd really think that $40.70 would be the last area where you'd want it to stop. And if it broke, say, $40.50, then just wait on for $38.96. Full stop, new line. I'm not overly that negative on it. I think it's probably related more to the market than Wesfarmers itself, the way that it's performing. Full stop, new line. On the traders time frame, then you'd be looking down towards $40 shorter time frame, $40.63 to $40.70, and have a stop below $40.50. Full stop, new line. Notice on the weekly charts, it's really the volume isn't that bad to the downside, so you might want to stand there and buy something of this. Full stop, new line. If it can resurrect itself above $43, then it's buyable with a stop loss below $41.90. And thank you for your questions. Now, we have a question with notice, which I grabbed from the box, which is about STW. Is it time to get in again? And thank you for that, Graham. You thought I wasn't listening, didn't you? STW. On STW, really, if this was a fifth wave, then it should test the fourth wave of lesser degree and get down to $48.26. Your stop loss would be below $48, and you would hope for a rally back up towards $53.21. Not much more than that, Graham, full stop my line. So on the investors time frame, it's a little bit premature, full stop my line. And it's intercepted a lot of old tops. If this is a good retracement, it's probably not the best. You would think $51.16 would be the right area. The right area for a try with a stop loss below $51. If that doesn't work, regroup down towards about $50 or even $48.26. Full stop your line. If you're really keen on a shorter term basis, then you can have a nibble at $51.30. My fear is that this could turn into a downtrend, so have a stop loss below $50. Full stop your line. Bloody gold stocks. Did I ever say I don't like gold stocks? Has anyone heard me say that? Raise your hand if you heard that. Why aren't these falling? They're just, it's, you know, I guess if it cracks 2,500, then look for 23.33. You know, is it the Aussie dollar? Is it that gold's that good? I just can't get this. Let's look at the monthlies. Monthlies take us nowhere, do nothing for us. It does encourage the bulls towards 3,400. On the weeklies, there's not damage yet, but it's not really doing anything. The dailies, I just don't get it. Do you want me to look at any gold stocks? Let's look at New Crusty Mining. New Crust is $15.75. That's still the big target area, and it's still got the potential for that. It really hasn't smashed what it should have done, and a break below $13.18 would yield $11.35. That should be a stop loss if you're buying and looking for still $15.75, which means the gold index might have some more friends. I still don't think anyone should buy it, but that's, you know, at the moment, stop loss would be below $13.28 if long. And if it breaks 13.28, expect 12.73, 12.91. Okay. Is there anything else we want to do? Let's do bring out your dead. SWM.ASX. I think last time I talked about this, I said 73 cents. It's now testing the old low at $1.05. And if it can get up above $1.30, I go, okay, yeah, you can buy it with a stop below $1 and hope for $2.37. Until that happens, I wouldn't be bothered. Full stop new line. On the intermediate time frame, probably 98 cents or 73 cents or 72 cents would be the right area for bothering about this, given the amount of volume that it is to the downside. Full stop new line. If it can rally above $1.20, then you can buy it, full stop your line. And on the traders time frame, same deal, 98 cents, full stop your line. Kevin, you'll get a chance to ask about Bell. And I did do Bell this afternoon, did do Bell today, didn't I? Did you see that? I did talk about Bell. I hope you saw it on the questions. Whew. PRS.ASX, the reject stock. Full stop me line. It's not that bad, really, full stop me line. Simply have a close stop at $6.20. You're probably going to get an $8.11 and you may get a $10.36. So what I would suggest with this is this may benefit from the fear of God that will be put into somebody who has purchased a mortgage, purchased an expensive car because interest rates are going down, and then interest rates go up and things slow down and everyone starts to panic. Full stop your line. So Eugene, it's not as bad as you think. Or feel, full stop your line. You could even buy this on a break above $7.02 with a stop loss below $5.91, hoping for $8, full stop your line. Now notice the way that it's come down, shaken out below there and then closed into this range. So it actually is a buy on a break above $6.75, full stop your line. With a stop loss below $6.50, full stop your line. Bank the cash. Is it time to bank the cash in anything? Full stop your line. OSL.ASX new line. Oncasil. I love the name of that. Now this has been a good low, Eugene, and I would say look for $14 cents. Or 13 cents. Full stop your line. Now it's been rallying well. If you are long and you have your stop at 9 cents on a longer term basis, and maybe take profit at 13 cents on some. If you are in from above 11 cents, then have your stop at 10 cents. Full stop your line. Yes, it's already hit the 13 cent mark. Full stop your line. So if you want to bank a little bit, I would suggest banking some. Don't bank it all, but just manage the stops that way. Full stop your line. I think it's got some more legs. Full stop your line. FLT.ASX, new line. Flight Centre. Now, Graham, seasonally this tends to do okay, but the better buying area is around the $41.28. So what I would do is put a stop loss at $43 and say 20 cents. And regroup at $41.28, which is the best buying area. Full stop, new line. TCL.ASX, new line. Thought I answered something on TCL, but I think that might have been from a shorter term question. Was it today, Sam? TCL, basically, TCL is out of control up there on the ADX, and in theory should come back down to $9.60. I got excited on it above $10, and it's not yet shown signs of changing trend, but maybe best thing is if you have a stop at $9.56 and just see if it can unwind itself, if you can be prepared to hold on for that. Full stop, new line. On the shorter time frame, it has gone short, so volume has been a bit iffy, really. It's been high. I'd be running a stop at $9.84 on this time frame there, Sam, and you might get to buy back at $9.43 or $9.10. Full stop, new line. And there it is, a stop loss below $9.78 would be an optimal place for a stop if you're buying or already long, and hopefully it gets above $10.20 and you can start to smile. Full stop, new line. APA. On the APA, the pipeline, I think I've mentioned this before. I do think it's a good idea to take some profit on this. Volume has been heavy-ish on the last month down, and it's also gone to the downside. Your target is $6.99 and $7.34, and I think you should be buying it with your ears pinned back. Full stop, new line. And your stop loss would be below $6.50. Hi, Richard. How you doing? Yep, we did the banks. Well and truly, I overdid the banks. Would you agree? I talked a lot about them. It's all on the recording. Now, APA had some very high degree of divergence on that top. So at the moment, if you wanted to get out of jail card, you would expect it up to around about $9 and then to have some trouble. Certainly if it broke $8.50, then you've got a chance of $7.18. So your stop should be below $8.40. Full stop, new line. CIM.ASX. $24.83 would be the nicest target you could get as a holder of this. The monthly chart's still working its way up. This is the old Leighton's Holdings, LEI. Why they would change their name to something Serbian, I don't know. In fact, Simic in Arabic means fish. Your stop loss would be below $22.63 if you are holding on long. And I don't see bad things for this terribly much at the moment because of the way that it's breaking up. Full stop, new line. Even the weekly reversal lacks conviction, and your stop loss would be below $22.62, and your hopes will be at $24.82 to get out at. Erica, full stop, new line. Currently, the rally, the best you could expect would be to $23.63 in this leg up, maybe $24, full stop, new line. The drift is still up. It's still not dead yet. And if you were really scared and nervous, you could probably have a stop on a close-only basis at $22.87. Is there any other particular burning questions that people have? Or shall we get some sleep? How do the seasonals look on AMC? Okay. Thoughts and retorts. Seasonals a little bit sloppy. Sloppy till the end of July, early August. Will I get the recording up tonight? Yes, Richard, I will. In fact, I think I can do you a favor right now and give you that recording link right now. How does that sound? If I can work out how to use this computer properly. Here we go, 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 here we go. This will be available at 20:20 in the evening. Paste. Go for it, Richard. Have fun. Okay, so here, if you register for the ER room, it will also tell you that. I did put up the ER room up earlier. So that's that one. And yeah, conclusion is hang loose, get ready, see if we can get some movement happening. But otherwise, you know, we got to have the US doing some strengthening. Otherwise, the Australian market, which has been weak, will probably bottom earlier than the other ones. We need to get in there. Notice here with the US market, we've taken some profit on our PHG trades short, and we're getting a little bit of a rally up. I think that's good. This is a timing where we can get a bit of strength, but it's only a profit take because it's not confirmed that it's changing trend yet. Okay. The trader dates, the trades and dates are already up there. You've got that from last couple of weeks. Ronnie. Thanks, Graham. And the recording's up there. Thanks, everybody. Have a good one. Thanks, Erica. Thanks, Kevin. And Mrs. Kevin. I hope I haven't put her to sleep there. Oh, I did put her to sleep. That's terrible. See everybody. Have a good one. Okay. See everyone. Have fun.